Okay, so I'm glad you're all enjoying yourselves. I hope you had a very enjoyable networking break. It's now time to move into the next session. So I'd like to now welcome on stage Barbara Njau, who is the Senior Markets Editor from the Financial Times FDI Intelligence. Thank you.
Good afternoon, no, actually, good morning, ladies and gentlemen. I would also say good morning to the Honourable Minister if he was here, but I can't see him. Thank you very much for inviting me, Country Factor, to talk on this. If you could allow me to reintroduce myself. My name is Barbara Njau. I'm the Senior Editor and the Markets Reporter for Foreign Direct Investment, which is, for Foreign Direct Investment Intelligence. And for my presentation, I'll actually be providing insight and intelligence from the Financial Times dedicated division to foreign direct investment. And so let me just begin by talking a bit about what FDI Intelligence is about. As I mentioned before, FDI Intelligence is the Financial Times dedicated division to foreign direct investment. And within this portfolio, we have a range of tools. So actually, if you look in your packs, you will see the first, which is FDI Magazine. You can find it in your packs, a bit of propaganda for you guys. And this is the leader in globalization, business of globalization, foreign direct investment around the world. And I'm the senior reporter for this magazine for Africa. Foreign direct investment markets is the Crossborder Investment Monitor. And it's what this FDI presentation will actually be based on. I pulled out data and conducted analysis on FDI into Zambia. And I'll be relying very heavily on our markets data. And also, as a sideline, it's a business-to-business publication and portfolio, and one of our key clients is United Nations. So a lot of the United Nations data and the database is actually based on FDI markets and FDI benchmarks. That's just as a side note. FDI benchmark is the corporate location assessment tools. FDI reports is our customized reports looking on any part of the region, and that's for our clients. And finally, FDI Atlas is our investment incentives navigator. And to get more of an idea about what we do, please do log on to www.fdiintelligence.com to maybe get an idea of what our tools and our portfolio really does. So thank you for listening to that bit of propaganda. So when I'm talking about foreign direct investment into countries, and foreign direct investment into Zambia, I don't think it's possible to understand this in a vacuum. So just to give you a bit of an idea about the structure of my presentation, it's going to be sort of an inverted triangle. So I'll look at the global macroeconomic scenario and look at what's happening on the global framework for the last 12 months, before then looking more specifically at the continental scenario and looking at what's been happening in Africa, and then I'll focus in more on Zambia and FDI in Zambia. So as you can see, I'm saying that the economic and political context in which trade and investment has been occurring over the past 12 months has been characterized by recovery versus upheaval. What I mean by recovery versus upheaval is that the well-documented 2008 financial crisis, as you all know, actually has resulted in a lot of tectonic shifts. And between 2009 and 2010, post-crisis, there was a lot of recovery in a lot of the major regions. Some regions, such as Africa and Asia, were actually having a lot of economic recovery that was much faster than the more developed economies. However, in 2010, there was a general recovery around world markets. But the past 12 months have actually seen that this recovery is being threatened by upheaval. So what has been dubbed today as the Arab Spring that happened from January through till October and is still ongoing in certain regions and countries such as Egypt today, is appearing to threaten this recovery. And so what the 12 months have actually been characterized by is slow economic recovery, exchange rate instability, sovereign debt problems, and this means that companies and investors, such as yourselves, have become much more bearish. By that I mean they've become much more cautious in the foreign expansion plans, and they tend to now cherry pick much more what regions and what countries that they are interested in. So looking at the continental scenario and looking at Africa, Africa has actually displayed a much stronger resilience to this upheaval, and it's continued on its upwards trajectory of recovery since the 2008 financial crisis. So as I've written here, the global financial economic crisis halved Africa's GDP growth from 6% to around 3% post-2008. However, since then, Africa has actually found that it's been very resilient in recovery. And in 2010, its average rate of growth was about 4.9%. And this has actually dipped a bit in 2011 to 3.7%. And this is largely due to what's been happening in North Africa. However, I would have to say that when you look at sub-Saharan Africa, the picture still remains much more positive. When you look at sub-Saharan Africa, you look at certain reports, for example, the McKinsey reports, the Lions on the Move, it still shows that Africa's sub-Saharan economies are still very robust in their growth. So looking at Zambia, I actually do feel that Zambia is a bit of a microcosm of what Africa is seeing, because Zambia's economy has still continued to recover very robustly post-2008. And so the economic growth has grown from 6.5% to 20 in 2011, and the Africa Economic Outlook of 2011 predicts that this growth, this GDP growth, will continue to 6.7% in 2012. And as has been mentioned before by the Honourable Minister, Zambia is Africa's biggest copper producer. And this copper production grew despite the current turmoil that we're seeing in the copper markets and the commodity prices. It's still estimated to have grown by 7.5% in 2011, and it could grow by up to 8.5% in 2012. So this is actually still a very rosy picture. However, I would still actually like to say that it's important to look at the other sectors. Maybe sometimes there's too much of a focus on one sector, and actually Zambia's economic growth has actually been driven by also agriculture, tourism, construction, and manufacturing. As a side anecdote, I was actually in Morocco about 1.5 weeks ago. I was conducting a special report there that is being sponsored by the National Investment Agency, and manufacturing is actually seen as one of the key drivers of growth in Africa. And I think this is actually a very positive thing to see that Zambia is taking advantage of its manufacturing sector and trying to increase its economic growth from the manufacturing perspective. So the Zambian government, this is the Banda government, but also the new SATA government, has been very aggressive in pursuing business reforms and encouraging private investment, and also this bodes very well for private investors. It shows that Zambia as an economy has a good offer to foreign investors who are still reeling from the effects of what's happening in developed economies and are looking to now the developing economies and what they offer. And so looking at foreign direct investment into Zambia, the past few years, it's very interesting to see that donor assistance has shifted from the traditional Western economies, whilst UK and USA still play a very important role. The role of India and China is increasing. And the turbulence in the ongoing economic crisis that's being experienced by developed economies will still continue to have a bit of an effect on Zambia, and its growing trade surplus might be affected by this. However, there appears to be a bit more of a tectonic shift, because maybe whilst the developed economies are receding a bit more in their investment into Zambia, this is actually being superseded by the developing economies, so the commodity-hungry investors from China, India, other Asian markets, and even from Latin America and Russia. So that will be very important to watch, the increasing South-South cooperation. So what does this all mean? And I'll be basing this second part of my presentation on what we've actually found from FDI markets. As I mentioned before, this is our cross-border and investment monitor from FDI Intelligence, and this is actually a really interesting tool that looks at cross-border greenfield investment, and this is heavily used by a lot of multinational companies. And so when looking at Zambia, as you can see from this bar, there's been an upward trajectory in the increase in FDI, and 2011, as you can see from here, has actually recorded the highest amount of greenfield foreign direct investment. And so our FDI markets database shows that between 2003 January and September 2011, there have been a total of 110 investment projects. This is greenfield investment projects from 77 companies. And when you look at this, looking more closely at FDI trends, the leading sector appears to be metals. So metals and the copper factory, the copper sector still appears to be a very key actor. And the leading sector accounted for 38% of all projects. And looking at the business activity, as I mentioned before, manufacturing has been very important. And in 2011, the leading business activity was manufacturing, which accounted for 39% of all projects. and the average number of jobs created per project was 399. That's the average. However, I'd like to maybe draw your attention to the trajectory. This is the jobs creation from greenfield investments alone. And in 2011, there were about nearly 10,000 jobs created, and this is from 2,000 jobs created in 2003. So when you look at this, the pictures does appear to be very important in having a knock-on effect. FDI seems to be very important in creating Zambia, empowering its economic growth through creating jobs for its local people. And the top 10 companies investing in Zambia during this period, which accounts for 35% of all investment projects, were China Non-Ferrous Metals Mining. This is a Chinese company. The First Quantum Minerals, which also had its presentation, which is the second largest investor. And Vendata Resources, which is a UK company, was the third top investor into Zambia. Okay, this is gonna work. Yeah, and so looking at destination highlights, the top 3 source markets between 2003 and 2011 for outward foreign direct investment was South Africa, Canada, and India. And the top 3 destination cities for inward investment were the capital of Zambia, which is Lusaka, but also Ndola and Kitwe. And the average project size was 151 million per project. But again, I will draw your attention to 2011. And the 2011 actually had the highest amount of capital in terms of foreign direct investment at $2.20 billion worth of investments. And this was 27 investments made in 2011. And so having a closer look at industries and looking at the sectors themselves more specifically, I mentioned metals was the leading attractor of foreign direct investment, and it recorded the highest growth at 11% per annum. However, if you look at this, the second top leader was financial services. And this is very important because financial services has been predicted by McKinsey as one of the key growth drivers of Africa's GDP growth in the future. And so it's very important to see that Zambia is taking advantage of its banking opportunities. It has a vast unbanked population, and financial services will be a very important and crucial area of growth. And the third is, interestingly, alternative and renewable energy. And so looking at the leading business activity, as I mentioned, manufacturing accounted for the highest amount of foreign direct investment, and it recorded the highest growth at 128% growth per annum on average. The second one was extraction, and the third is business services. And looking at the destination market analysis, whilst Lusaka, Ndole, and Kitwe appear to be the top three cities attracting foreign direct investment, I'd like you to see that the top 10 cities still attracted a sizable amount. I think this is very important to highlight that Zambia, much like several other countries in Africa, will be helped in its economic growth by actually diversifying its economic hubs. And this is a very encouraging picture to see that not all economic activity is concentrated on maybe the traditional center, but it's actually being devolved to other areas. So that will be very important in Zambia's future economic growth. And so taking all that into account from FDI Markets database, between January 2003 and October 2011, new investments was the key driver of foreign direct investment. By new investments, I mean greenfield projects, projects that are just starting up. The minister mentioned that I think about 60% of Zambia is still unmapped. So a lot of foreign companies are experiencing first mover advantage. This can result in a lot of windfall profits. And so it's for that reason that new investment still continues to lead foreign direct investment flows into Zambia. And I also conducted a more specific analysis using the FDI Markets database, looking from January 2011 to November 2011, so looking into the fourth quarter of this year. And it seems that FDI Markets recorded 20 investment projects from 18 companies, and the leading sector and business activities still continue to be manufacturing and metals, respectively. And South Africa accounted for the highest amount of outward investments. As I mentioned earlier, there's going to be an increase in South-South cooperation. Other countries that have been technically classified as developing will be very important. Countries like the BRICS, South Africa has actually been recently added to the BRICS, and they will be very important because these countries are very commodity hungry. They're very hungry for new resources, and they're looking for new areas of investment that are different from the traditional sort of northern economies, and Zambia will actually benefit very heavily. And it will benefit from this primarily because it's very politically stable. When you look at Zambia and when you look at the recent elections that happened in September 2011, they were very peaceful. And it's this peace and stability, as I mentioned earlier, there's upheaval going around in other regions, and the investment map is being changed. So regions before that used to be seen as the stable ones, for example, Egypt, which in 2009, 2010 was seen as kind of the key area for FDI, is now still in turmoil. And Zambia will actually benefit from this because of the stability, and this will have a knock-on effect on the business environment and actually reinforce the business environment. And Zambia continues to have a growing trade surplus. So with that in mind, I think the picture still appears, if I can say, much more rosy for Zambia. So thank you very much for listening. And if you'd like any more information or any ideas about what FDI Intelligence is about and what our portfolio consists of, please do not hesitate to contact me. Thank you very much.